Canada has an abundance of natural resources. It has the third largest known supplies of oil in the world, helping to make it the 10th largest economy and top 20 GDP per capita. It benefits from close economic ties with the United States, the Commonwealth and Europe, and has a highly educated workforce. In the past 2 decades, it has grown around 2.5% a year, which is quite respectable, but also misleading. If we take into account Canada's population growth, GDP per capita is much more disappointing, less than 1%. Canada's natural advantages are declining, and it faces familiar problems: an ageing population, chronic housing costs, and a lack of productivity growth. Can Canada cope with the challenges of a new age, or is it doomed to fall further behind its noisy neighbour on the southern border? In the credit crunch of 2008, Canada was relatively insulated. Unlike the US and the UK, it was much less impacted by financial turmoil. However, since the 2008 crisis, in dollar terms, the economy has slipped behind both the United States and Australia. Australia is a good comparison because the two countries have many similarities: a large landmass, commodity-rich, English-speaking, and high living standards. The recent commodity boom of 2022 helped the Canadian economy, at least in the short term. With rising oil prices, revenues increase. But as prices quickly slip back down, it's a reminder that Canada cannot rely on fossil fuels, especially as the world economy is looking to decarbonise. Now, given Canada's huge reserves of oil and gas, a good question to ask is, why can't Canada develop greater wealth like some of the other oil giants? Canada's continental size and landscape is both an asset and also a problem. A cost that Canada faces is that it's significantly more expensive to extract oil from the frozen wastes of northern Canada. With the US expanding production of cheap shale gas and oil, Canada is struggling to be competitive because its oil industry is more reliant than others on high prices. Also, unlike the United States, Canada is much more reliant on trade with the rest of the world. Its principal trading partners, the UK, Europe and China, have all seen slower growth in recent years, causing a fall in demand for Canadian exports. But more concerningly, economists worry that, hidden from headline statistics, Canada has been losing its long-term competitive advantage. The main reason is declining productivity, a key factor behind long-run economic growth. Canada has slipped behind quite significantly compared to the United States. The reasons for Canada's poor productivity are numerous. They include a lack of investment and innovation. The Business Council of Alberta estimates the sprawling geography of Canada create internal trade barriers equivalent to 7% tariff on goods. Canada's geography is that mixed blessing. The low population density is a drawback for efficiency, and it's worsened by relatively small manufacturing firms who struggle to gain the global economies of scale more common in the world today. Apart from cultural pop icons, Canada has struggled to develop a global penetration of its business. BlackBerry threatened for a while before spectacularly imploding. Despite impressive levels of education, a weakness of the economy is low levels of innovation and entrepreneurship. Canada has one of the lowest rates of research and development at just 1.6% of GDP, similar to Australia, but much less than the OECD average of 2.7%. And this is often the curse of an oil-rich economy. There's less incentive to innovate and invest elsewhere in the economy. If we look at patents granted per 10,000 people, a mere 5.9 in Canada compared to 10 in America and 28 in South Korea. Now, in common with most of the rest of the world, Canada has an ageing population and a sharp fall in fertility. And with a low population density and a need for skilled workers, it has embraced relatively high levels of net migration, and it's been able to select those workers with skills that the economy needs. In the last decade, immigrant workers accounted for 84% of the growth in the labour force. And this has contributed to a surge in the population. Last year, Canada's population grew by nearly 1 million, 3%. And if this growth rate was to be maintained, its population would double from 40 million to 80 million by 2050. Now, this net migration has boosted real GDP, and it's a sharp contrast to shrinking countries like Italy, Japan and Korea. However, the growth in the population, the growth in output, has hidden the much slower growth of real wages per person. And when we take into account soaring housing costs, many people's living standards are stagnating, perhaps even falling. Now, like elsewhere, high levels of immigration have caused tension between those who support the economic benefits of migration and the fear that it is worsening other issues such as housing costs and public services. And it's not helped that this boost in immigration has coincided with Canada's housing market being one of the most expensive places in the world. It has the second highest rate of house price to income ratio growth in the OECD. Real estate is one of the biggest sectors of the economy. Mostly avoiding the problems of a credit crunch, prices soared throughout the 2010s through a combination of low interest rates, rising population, and restrictions on building where people want to live. All this combined to push up prices and rents, putting housing out of the reach of many young people. And this is one of the hidden crises of Canadian living standards, creating a society of winners and losers. It's a familiar story across the world, but Canada's crisis is perhaps one of the most acute. The political pressure has been so bad, the government recently passed a law banning foreign ownership of Canadian homes. But this is mostly tinkering at the edges. It will only have a minimal effect on improving affordability. Now, even though Canada has been a popular destination for migrants, it's seeing actually one of the highest rates of net emigration as people leave. Reuters report a typical migrant who fled Hong Kong but was shocked to find herself paying over 30% of income on a small basement flat. And this is often cited as why people want to leave Canada, the cost of living. Now, GDP is not everything. Canada still ranks highly on life satisfaction indicators, such as health, education, and relative freedom. Its major cities are considered amongst the most desirable places to live in the world, as long as you can afford the housing. And also, whilst the economy is struggling with the move to decarbonisation, it also offers new opportunities. Canada is rich in commodities such as copper and nickel, vital ingredients in the green technology revolution. Global warming could also open up more of the northern parts of the country. For example, melting Arctic ice opens up the possibility of more trade through the Northwest Passage. Yet even this could bring new challenges. In terms of defence spending, Canada has one of the lowest rates in NATO, just 1.3% of GDP, below the 2% minimum that NATO and people like Trump say should be the goal of defence spending. Now, historically, Canada's geographical position has given it an easy ride, you could say. Its only land border is with a world military superpower and ally, the United States. So this means that historically there's been little incentive to spend on defence. But the increased travel through the Northwest Passage does raise the potential for tensions between China and Russia. So at the very least, there's pressure on Canada to increase defence spending. But that comes at a time when debt as a share of GDP is already quite high and the government keen to try to reduce it. Debt as a share of GDP rose close to 100% during COVID and has only slightly come down. Unlike the United States, Canada has not pursued an expansionary fiscal policy, and it means that the current state of its economy is weaker than that of its neighbour. The question is, can it transition to a more stronger, diversified economy, less reliant on fossil fuels? It has a lot of assets, strong institutions, good international relations, abundant natural resources, and an educated workforce. Yet there's also a sense of missed opportunities. Outside oil, the economy is falling behind, and immigration, whilst a solution to an ageing population and a risk of a shrinking population, it's also exacerbated the housing crisis, which is really making life miserable for many young people. Given Canada's very low population density, there's no excuse for not building more houses but it needs some kind of vision to expand out of its popular metropolises. Canada is still also very heavily dependent on the United States. If Trump were to get re-elected and throw away NAFTA, it would again hit Canadian trade and economy quite hard. An interesting question is what will be the state of the US economy later in the year. This video looks at whether the US economic growth is sustainable or whether it may hit the buffers before the November election. Please subscribe and see you soon.